Hello and welcome to VC Circle podcast. I'm your host, Joseph Rai. In this episode, we'll be in conversation with Venkat Vallapaneni, who is managing partner at early stage venture capital firm Inflexor Ventures. Venkat had earlier co-founded Parampara Capital that had roped in the private equity arm of IDFC Group as its partner for its debut fund. Earlier this year, Venkat and his team floated the second fund to raise $100 million under Inflexor Ventures. Inflexor Ventures was in the news recently as it marks the first close of the new fund at 230 crore rupees. It became one of the bunch of VC firms to announce a fundraising milestone in the midst of the pandemic. Hi Venkat, welcome to our podcast and thank you for speaking with us.
Hey Joseph, glad to be here. Thank you.
Cool. I wanted to jump straight into your fundraising process. You marked the first close of your fund in September in the midst of the pandemic. Give us a sense of the fundraising climate and the sentiments of limited partners on the venture capital industry in India.
Yeah. So first about fundraising, right? So while the pandemic has got negative impact on the economy, there is certain aspects of pandemic that had a positive impact, right? That is, especially in the technology sector, right? The whole emphasis has gone to the technology sector, and apart from that, people, since the economy has slowed down, especially the public markets and stuff like that, outside technology, people are looking for alternative investments as well, right? So because of that, actually, so while we had a slow start in fundraising process, but definitely had encouraging results in the whole process, right? So because we focused on technology and because of shift towards technology, and then people looking for alternative investments, right, as opposed to traditional listed markets and other real estate investments. Slowly the winds are shifting towards alternative investments as well. So it's been very encouraging for us, for sure.
Cool. Right? Cool. So, give us some color on your limited partners. Were they mostly domestic or foreign LPs in the fund so far who is committed?
Right. So we are primarily domestic fund, or we raise funds from the domestic investors and the institutes, right? So far we got some marquee institutes such as SBICAP Ventures, right? And they are our anchor investor. CDB is one of the other institutional investor. Apart from that, there are many marquee family offices in India are part of our fund at this point. Yes.
Okay. And domestic investors are said to be traditionally wary of investing in the AIF industry, but they seem to be warming up into this industry. What were some of their concerns that they expressed while you had conversations with them?
Absolutely. And one thing we've seen is, right, many folks, have, while they know about technology, we are focused on deep tech, right? I mean, when they hear the term deep tech, I mean, they think they don't understand the deep tech as much, right? So most of the questions that get asked is around what is the deep tech, right? What do you guys do? What is AI? What is other technologies that how do they make impact on the business, right? How do you get exits? How do you make money, right? I mean, these are the primary questions we get asked all the time, right? So
okay. Yeah. All right. So, Inflexor Ventures is sector agnostic with focus on disruptive technology startups that use deep tech, like you said, right? So tell us, what is the state of the deep tech market in India and which segments within it are ripe for VC investments?
Right. So deep tech is, again, right, very misunderstood term in our view, right? And, from our perspective, deep tech is where technology makes deep impact on society, right? Any technology, right? And this has in our view, again, this has different meaning and connotation compared to developed economies such as the US and Europe, right? Where there's a lot of emphasis on innovation and research, right? Here, while the things are improving here, I think what we look for is technology that is making impact, but also has got a real business use case, right? I mean, because the technology is getting used to solve a real world business problem, right? That's something we look for from the Indian perspective, right? So that could be very different from developed countries, right? So that's something you need to keep in mind. And second thing is, right, we also look for asset light and recurring enterprise platforms, right? That's our favorite sector as well, right? Okay. While we also look for some we also support some companies on the manufacturing sector. There we look for really, technology usage and the scale, right? So that's what we look for. Again,
Okay.
right? Yeah, and we invest in the pre-series A and early stage companies where
Right.
the companies are not making profits, but they have proven clients and business model has proven, and and stuff like that, right? So that's where our interest would be.
Right.
And as far as the sectors are concerned, right? Again,
Right.
now if you look at in the last few months because of pandemic, right, there are two
Right.
sectors that have been very, very active, right?
You're right.
Healthcare and edutech, right?
Right.
So
Right.
and those two sectors, right? I don't need to talk about that. And outside that, if you look at it in India, traditionally, consumer tech is one area, and the fintech, right? These two
Right.
areas have been very, very active as well, right? So we definitely look at all these sectors, four sectors, right? Health tech, edutech, fintech, and consumer tech. Outside that, again, agri tech people talk about, but what there is some activity, but I don't think there's a deep what do you call engagement or activity in these sectors, right? But there's also one good sign we've seen, right? We invested in one company in the space tech, right? That is very, very opportunistic. Now space is now open for commercial participation by government of India, right? I mean now there's a lot of interest and activity around space tech, right? So there are sectors like space tech which are coming up as well, right? You need to yeah.
Okay. Interesting. How do you see your investment pace playing out in the coming months? Because we are in the midst of the pandemic. Do you plan to be more cautious in your investments?
No, I wouldn't say cautious, right? But there's definitely investment in the early stage areas, right? And
Right.
early stage and probably pre-series A, that has slowed down for sure, right? People have been waiting on the sidelines, before investing because, again, there are, as I said, there are positive things that come out of this whole thing as well, right? Because companies now know how to deal with, right, adverse situations, right? Now companies know how to cut the costs, how to operate, lean. I mean, there are very, very positive things coming out, and there people are able to manage within their means, right? That teaches immense lessons to the entrepreneurs, right? That is a very good sign for us, right? And that makes our job easier. We are not sitting on the sidelines, right? We are definitely looking for opportunities, and anything that has got good business upside, and we are waiting, right? I mean, for people to come to us, and we are looking for opportunities as well to invest. And same thing is happening in the industry as well. In our view, the investment pace is going to pick up going forward from now, right? I think.
Okay. So what kind of deal flow are you seeing, and do you have a certain number of deals that you have in your mind that you're going to do, per annum?
Right. So, we are very, very focused, right? I mean, we don't do spray and pray kind of model, but because we spend, we are a 500 crore fund, right? I mean, domestic fund. With that, right, we plan to invest between 20 and 25 companies, right? So each company would take an exposure of 25 to 30 crores, right? That's the exposure we would like to take on any given company. So with that, right, our investment would be over 4 years in our view, right? So each year we would do 6, 7 investments, right? That's a plan at this point. Yeah.
Okay. So how many investments have you done so far from the new fund?
Okay, from the new fund, we've done one investment already because it's fairly new, right? I mean, we just got the SBICAP approval in February, right? And now, we raised the fund. We closed the fund in August. We did the first investment in a company called Steradian Semiconductors. They are into autonomous, vehicle surveillance using 4D imaging radar. They're out of Bangalore, and we also in advanced talks with 4 other companies, right? Hope to do at least 2 in next few months, 2 to 3 months, I would say, right?
Okay. So for VCs, exits are equally important, or even more important than the investments that you make. So how bullish are you on the exit front in the current times, and will we see any exits from your Parampara fund happening in the near future?
Yes. Parampara, right? We did 12 investments, right? Out of that, right, we did one full exit and one partial exit, right? I mean, that gave us good returns as well, right? For sure. And outside that, out of 10 companies, we did 7 up rounds, and 3 of the companies are in the process, right? So overall, the sector has been doing very reasonably well, right, from the technology side, early stage, as far as we are concerned, right?
Right.
And at
right.
the same time, right, we focus early onto how to get the exits over the period. Our typical timeline for exit is around 5 years, right? So and typical exits we see is 50% from, I would say, strategic exit, strategic acquisitions, and 50% would be from follow-on investments, right? Series B investments coming in and giving the exit to the early stage guys, right? So typically that's a kind of exit strategy we look for. And then I think exits activity is increasing in India for sure, right? You may not see the IPO activity as you see in the US, right? But definitely there is even on the enterprise sector we are focused on, right? There is quite a few large companies, unicorns getting created, right? So I think which is very good thing. Outside this large unicorns, there is also many deals actually happen between $50 to $100 million, right? I think which may not make the news as much, but there's quite a few deals that are happening as well. So in our view, for India, we are definitely making progress, and we are it is only upside we see for Indian startup ecosystem in the future.
Okay. And how have you been engaging with your existing portfolio companies? Any specific advice that you constantly gave to them during this lockdown period? And are you concerned about some portfolio companies of yours?
No, I mean, a couple of things, right? They're in our portfolio in Fund 1. There were 2 manufacturing, oriented companies, right? Rest of them are SaaS and technology side companies, right? SaaS and technology companies had a minimal impact in my. Some of them had tailwinds actually, right? They had better business than before pandemic, but wherever the manufacturing is involved, because the plants were shut down, right? And there was a bit of an impact in the initial period, but after that, they picked up quite well and and doing well as well, right? So we are not concerned about any company at this point in Fund 1, right? And it's been good for us.
Cool. Are any of your companies, close to raising a new round of an equity funding?
Yes. In during the pandemic, actually, right? There were a couple of our companies, right? One was Entropic and other one is Verlu. They both raised Series A funding from overseas funds, right? Falcon Edge, AWI, and other funds, right? So while the pandemic has slowed down, but funding has continued, right? Even now, one of our portfolio companies is in the close to closing the Series A round, actually, right? So which will be announced pretty soon.
Before we wrap up, I would like to ask you, when do you expect to make the final close of your fund? Do you think it's going to take a little longer than earlier envisaged because of the pandemic?
Actually, no. I mean, because we've been probably for whatever reason, right? Probably technology and other thing, and our Fund 1 performance, we've been quite done well in terms of doing the first close, and final close we expect to see that happen by end of March in my view, right? For the retail, for the family office and other things, that will get closed by end of this year, and for the institutions would be end of March is what we're thinking, right? So that's a game plan at this point.
Cool, great. So thank you for sharing your thoughts with us, Venkat. And that's all we have in this edition of VC Circle podcast. Thank you all for listening. Take care and goodbye.